about distributions and reversions. Distributions and mean reversions. Why they are so interesting in the world of trading, or at least why they're so useful. It's really quite simple when you understand it, right? If you ever took a statistics class in high school, or looked at a normal bell curve of distribution, if a teacher ever showed you the bell curve about the grades in the class, or showed you some other example of normal distribution, and if you remember something about that, then you probably remember that about a little bit more than 2/3, 68.2%, typically falls within the first standard deviation of the mean of the bell curve, right? And then 2 standard deviations away, 95.5% fall within either side of the 2 standard deviations away from the mean, to the up and down or left and right, whatever position you have your bell curve in. And then 99.7% fall within 3 standard deviations away from the mean, on both sides of the mean. That's normal distribution, right, or standard deviations. And then you have Laplace distributions, which are probabilities similar to but different from normal distribution. So a Laplace distribution curve looks more like an Eiffel Tower. So instead of like a bell curve, it looks more like, pointy at the top, and then both the sides expand as it, comes down towards the ground, if you will. That's a typical Laplace distribution model, right? If you start at one point and expand it out. And you have similar probabilities of 68.2, 95.5, 99.7, etc. And of course you can keep going, just like with normal distributions. You can go to 4th, 5th, 6th, 7th, 8th distribution points, standard deviations, or Laplace distribution points. And they don't fall exactly in the same places, which is why sometimes you usually see Laplace distribution is tighter in the first standard deviation, but then wider at the third than the normal distribution. Things like that. Now, why is that useful in trading? Well, it's useful because what happens in trading? Well, assets move according to the returns. And what is it that causes that movement? It's the volatility, which is the standard deviation of returns, right? So assets do what? What do they do with respect to their returns? Well, the returns move away from the mean of returns, and then they mean revert to the mean of returns, right? Price does not. Price just follows the returns, like a good dog follows its master. Now, does it follow it every single step? No, sometimes it's out of step for 1 or 2 or maybe even 3 steps, but then it'll catch right back up and follow those returns. So if the returns are generally going up, the price action will generally go up. If the returns are falling, eventually the price action will fall. And it's usually spot on, like candle for candle, but for a variety of reasons, including the volatility, or the variance, the entropy, some randomness, right, some divergence, etc. You can see sometimes they're out of step for 1 or 2 candles, depending on on whatever time frame you're on, and then they'll go right back in line and follow those returns. Now, is it possible to use distribution and mean reversion to trade? Well, not only is it possible, that's what we do at Alpha Trading, right? We trade the returns, we trade the volatility, we trade the entropy, and the probability and the statistics, right? That's what the VEPs are: volatility, entropy, probability, and statistics. We do that by using tools that we've and the because we figured out years ago how to use these tools that were originally developed for options traders in longer term trades. We figured out how to use them to scalp delta. Now, why is that useful? It's useful because if you want to trade the VEPs, the most consistently profitable way to do it is to trade low time VEPs, low time frame volatility, entropy, probability, and statistics, because you are much more likely to get multiple occurrences of opportunity in any given trading session if you're trading lower time frames. And you can say, well, but then you're going to miss bigger percentage gains or bigger percentage moves. Well, no, you're going to catch more little moves that when you add them up over the time of the day, they're going to add up to be a lot more than just catching 1 or 2 or 3 bigger moves. Now, is it possible to use the VEPs to trade the higher time frames? Of course it is. But again, why is it unwise compared to trading lower time frames, in my opinion? Well, because it is much easier for volatile assets to turn around and eat away the gains you've made on low time frames and move the asset back towards your entry point. And when you do that, when you try to hold on to a longer term time frame trade, the asset has a much bigger chance of eating your profits and then you making a mistake and getting out too late, possibly even in a loss. And then what do you know? The asset flips around again right when you get out and starts moving back in the direction that your trade had been in. So you would have had potentially 3 trades, right? One on the way up, one on the way down, and one on the way back up again. Or one on the way down, one on the way up, and one on the way back down again, depending on what kind of trade you were in. So that is why you want to trade low time frames and not get stuck in positions that are just going to help you get wrecked. Anyway, that's it for now. If you want to know more about how to trade the VEPs, just go to alphatradinghq.com/discord. That's alphatradinghq.com/discord, and get free access to the free volatility starter pack of indicators and the free pre-populated chart that goes along with it, and free educational information, free tutorial videos, free access to the chat with real traders, free access to the live streams that we do 5 days a week. And yeah, it's all free. And only once you learn how to use that stuff and you know how to use it well, and you see that it works really well. If you're seriously, if you're a serious trader, then you can try the Pro subscription package for free for a couple of weeks. And if that works out well for you, you can always upgrade. But, most people aren't pro traders, so that doesn't apply to most of you. So, all right, take care, happy trading.